Check it out, a guide to choosing and using accounts and banking tools. Materials provided by Genesis Financial Management. By the end of the class, you will know the benefits of using a bank versus other cash management tools, the types of checking accounts, how to open a checking account, how to write checks, how to use ATM and debit cards, how to keep records, how to reconcile an account, and the benefits of automating. What is a checking account? A checking account allows you to write checks to pay bills and buy goods. The financial institution takes the money from your account and pays it to the person or company named on the check. You can also deposit and withdraw money in other ways from your checking account. The financial institution will send you a monthly statement that lists the deposits you made, the checks you wrote, and other withdrawals that you made. Who offers checking accounts? Banks, a for-profit company owned by investors in its stock. Anyone can walk up to a given bank and request an account. Credit unions, a nonprofit company owned by its customers, also called members. Credit unions serve specific populations of people who work at a given company, live in a given area, or belong to a specific group. Checking accounts at credit unions are called share draft accounts. Benefits of a checking account: convenience, cost, budgeting, safety. Number 1, checking accounts are convenient. Checking accounts are convenient because they provide you with a quick and easy access to your money. You can access money by withdrawing cash from a teller window, withdrawing cash from a drive-up window, withdrawing cash from an ATM, cashing a personal check at a bank, grocery store, or at other places where checks are accepted, obtaining cash back when making a purchase. Checks can be used to pay bills. Most stores and banks allow you to use your checking account to pay bills over the phone or by using the computer. You can access your money via check, debit card, money, ATM, machine, etc. Number 2, checking accounts can save you money. Using a checking account to manage your money is usually cheaper than using other businesses to cash a check or to buy money orders. Check cashing for account holders is usually free. A case study between Andrea and Stephen. Andrea used a check cashing store to cash her checks. She cashed 4 checks a month and was charged $5 each time. That meant that she paid $20 a month or $240 a year just to cash her checks. She also had to buy money orders to pay her bills. Whereas Stephen has an account at a local bank, which has a monthly fee of $5. This includes 8 free checks per month and free use of the ATM. He bought a box of 100 checks for $18. In this case, using the checking account for 1 year cost Stephen only $78. In 1 year, he saved $162 by using a checking account instead of a check cashing store. Number 3, checking accounts make budgeting easier. Using a checking account can help you manage your money. When you use checks to pay bills or a debit card to purchase things, you have a written record of where you spent your money and how much you spent. Keeping a checking account can help you establish credit. It helps build your relationship with banks. If you use your checking account responsibly, your bank will be more likely to approve your loan when you need one. Having a checking account also proves you pay your bills on time. Number 4, checking accounts are safety. You don't have to worry about your cash being lost or stolen when your money is in the bank. In most cases, any fraudulent charges will be covered by your bank as long as you catch them in time. We suggest that you check your bank account daily and review purchases. If your checks are stolen or lost, you can report it to the bank and they will protect your account from being used fraudulently. The bank's money is protected. If for some reason the bank were to close down or you go bankrupt, the FDIC will replace your funds up to $100,000. What about prepaid debit cards? What they are: a plastic card that carries the MasterCard or Visa logo and acts like a debit card. You preload it with money and you can use it anywhere you see the MasterCard or Visa logos. It can be a way to avoid carrying cash if consumer cannot get a checking account. It's safe. There are fraud protections in place. There's no risk of overdrawing because your spending limit is the amount that you put on the card. You can pay bills with it. You can use it at ATMs and make online and phone purchases. Fees for various transactions can be costly. They're not as easy to track where money has been spent, and it does not help build credit. Comparing costs monthly. Assuming a consumer who pays 5 recurring bills per month and visits the ATM 4 times, this data is obtained from the Rush Card schedule of fees. Rush Card costs at $19.95 to activate, and the data obtained from SunTrust Bank for their free checking product, no minimum balance required, free to open. You can see that the prepaid card costs $17.25 a month, whereas the free checking account costs $0 a month. Finding the right checking account for you. Ask friends, families, neighbors, and coworkers about the bank they use and whether they are happy with their bank. To determine what you need, think about how you would use your checking account. Consider what you're looking for. How many checks do you think you'll write a month? Do you want a bank that is close to your home or work? What are the bank's hours of operation? Will you use the ATM often? Does the bank have ATMs close to where you live or work? How often do you plan to visit the bank or use teller services? What other bank services are important to you? Keep costs in mind when looking for a checking account. How much money will you keep in your account? Will you be charged extra for writing checks? Are you willing to pay a monthly fee? If so, how much? Will you be charged to use your bank's ATM? Will you be charged for using teller services? Are there ways to avoid paying fees? Fee schedule. A fee schedule lists the fees you might be charged for certain activities. Some of the most common are monthly service fee, per check fee, check printing fee, ATM fees, overdraft fees, return check fees, stop payment fees, phone inquiry fees, and fee for helping you balance your checkbook. Types of checking accounts offered at banks: regular checking, free checking, premium checking, special accounts for students and seniors. Now you're ready to open a checking account. You'll need a picture identification or ID, social security number, and a deposit. They will perform an account verification and complete a signature card. Account verification. Account verification is when banks use your name, address, and other identifying information to access a system such as check systems or telecheck. These types of systems identify your history using checking accounts. These systems keep track of bounced checks and other negative information reported about you if you've held an account in the past. Banks might also review your credit report to determine whether you are a financially responsible customer. If you've had a history of writing bad checks or a history of mismanaging your credit, financial institutions may not be willing to open an account. Once a verification is cleared, you will be asked to sign a signature card. Here's a signature card. A signature card is a form you complete and sign when opening an account. This identifies the owner of the account. This may be used to verify your signatures on checks and withdrawals. Signing the signature card means you accept the fees, terms, and conditions of the account. Here's a check register. Anytime you put money in or take any money out, it is called a transaction. Each transaction you make needs to be recorded in your check register. Each column has a specific purpose. Check number. If you're writing a check, the check number or type of transaction goes here. Date. Record the date you wrote the check, made a purchase, deposit, withdrawal, or recorded a service fee. Check register. Description of transaction. Record the information to whom you made the check payable, made a deposit or withdrawal source. Payment or debit. Record the amount of checks written, ATM withdrawals, purchases, etc. Record any fees. Record any fees charged such as monthly maintenance fees or ATM fees. Deposit or credit. Record any deposits or automatic deposits you made to your account. Balance. This column adds any deposits or credits and subtract any fees and payments or debits to your account. Try this. Record the following transactions in the checkbook register. What's your final balance? Writing a check. Remember that a check is a written contract between you and your bank. When you write a check, you are asking the bank to take money from your account and give it to someone else. The first step before writing a check is to make sure you have enough money in your account. Write it in ink, write it clearly, and record each check in your check registry. To complete your checks, you'll need to fill in the date, the pay to the order of line, the dollar amount of the check, the dollar amount of the check in words, the memo section, optional, the signature line, the back of the check. The back of the check has an endorsement area. Endorsing a check means to sign the back of the check to make it ready for deposit or cashing out. How do you know if you have enough money in your account? Look at your check register. It's very important to record every deposit and withdrawal in your check register so you don't run the risk of writing a check or making a debit for an amount greater than what you have on hand. Remember, most check and debits clear your account the day that you swipe the card or the day that you hand the check to the merchant. Also, check online. Most accounts have online checking. Check 21. This law went into effect in 2003 and affects consumers in two primary ways. The checks you write clear faster now, gone are the days of floating a payment, and you're less likely to get your actual canceled checks back with your monthly statement and more likely to receive substitute checks or check images. Deposit slips. As you can see, you'll write your date, your name, your account number, the total amount of deposit, the amount of cash you want back, the sum of all the items deposited, and you list the amount of each item that you are depositing here. Here's an example of a checking account statement. As you can see, it's very similar to a check register. However, you're waiting on the bank to provide you with this statement. A faster way would be to just go online and check your account. If you write a bad check. Deliberately writing a bad check without sufficient funds, writing a check from an account that is closed, or illegally placing a stop payment is a crime. You can also be charged a processing fee by your bank, and this fee can be as much as $40. Your creditor can also sue you for passing a bad check. In addition to recovering the amount that is owed, the creditor can also recover damages. Practice safe checking. Always write checks in ink. Don't endorse checks until you're ready to deposit, and consider writing for deposit only under your name for the added security. Keep unused checks in a safe place, and check your bank statement every month to make sure that there are no suspicious withdrawals and that the statement matches up with what you wrote in your checkbook register. Debit cards, also called check cards, have Visa or MasterCard logos on them, but instead of drawing on a line of credit, the debit card is linked to your checking account and acts just like a check when you swipe it. You'll need a PIN number to use them, and you may have the option to use it as a credit card when you swipe it, but the money still comes out directly from your checking account. When you swipe it as a debit card, you do have the option to take cash back, which can be a handy, fee-free way to make a withdrawal. Smart debit card use. Don't choose a PIN that's easy to guess, like your birth date, social security number, address, etc., and memorize your PIN. Immediately record all transactions in your check register. Sign the back of your card right away. Keep receipts to cross-check against your bank statements. Use an ATM owned by your bank to avoid unnecessary fees. Immediately report lost or stolen cards. Summary. There are many advantages to having a checking account, and they help you to save money. Checking accounts will allow you to write checks, withdraw and deposit money, pay bills online, etc. Keeping an accurate check registry is the key to maintaining a successful checking account. Questions, comments, concerns? If you'd like to speak to one of our certified personal financial counselors, you can call us at 877-202-9246 or visit us at www.yourgfm.org. Also, keep in mind, if you do not have the ability to open a checking account for whatever reason, give us a call. We might have an option that you might find useful.